This is the Scrap Metal Commodities Recycling and Economic Report by BENLEE and Raleigh Goldsboro Recycling, November 13, 2017. Last week, commodity prices and economic reports were mixed. U.S. steel production fell slightly, remaining well ahead of last year and ahead of 2 years ago at this point of the year due to good demand. Oil prices rose about $1.50 a barrel to $63.60, hitting a new multi-year high on good global demand. With oil prices high and the oil rig count going up by 9 to 738, U.S. oil production hit all-time highs, which is great news for the oil and steel industry as well as job growth. Related, U.S. oil exports, yes, exports, hit a new all-time high as well, which is helping put downward pressure on the rising oil prices and again great for U.S. jobs. Iron ore rose $2 a metric ton to $62, which is putting slight upward pressure on steel prices along with good demand. Scrap ferrous prices remain flat as there is word of higher prices next month. Nucor's DRI scrap metal substitute plant has gone down again, which will put upward pressure on these prices. Hot dip galvanized steel held steady at $9.80 a ton as upward pressure continues with higher iron ore prices and the DRI plant down. Stainless steel for scrap price remains steady yet again at 29.5 cents on no new news. Copper fell 4 cents and we're now tracking March COMEX at $3.09. Copper remains off the multi-year high of last month and is up 5 cents this morning at 313.9. The 5-year chart shows copper in a range below the 3-year high of last month. Copper inventories fell slightly, which will put upward pressure on those prices. Aluminum fell 4 cents, ending at 94.6 cents, staying near a 6-year plus high. Smelters are full of scrap though, so we are seeing shipments being pushed out to December. Aluminum inventories continue to fall to about new 10-year lows, keeping upward pressure on these prices. Cardboard fell $20 a ton to $115. This means prices were a huge 60% higher, $70 a ton just 3 months ago. China is the key reason for this cardboard drop, as China has been reducing imports of paper, cardboard, plastic, and metal. The transportation services industry hit new all-time highs last month. This is a measure of the volume of services performed for the hire for freight and hire for passenger carriers. Great news for the economy and explains why it is tough to find truck drivers and why airports have been so busy. The U.S. ISM non-manufacturing index rose to 60.1 in October, making it the highest reading since August 2005, more than 12 years ago, as production, employment, inventories rose, and the outlook for business conditions remained positive. The University of Michigan's Consumer Sentiment Index for the U.S. fell to 97.8 in November from October's 100.7, which was the strongest reading since January 2004, as current and expected economic conditions deteriorated a bit, with consumers also expecting a rise in inflation next year. Wall Street's main indexes all hit new record highs during the week, but the Dow Jones finished the week down 117 points to 23,422, as there was word that the corporate tax cut that has been proposed might not take effect until 2019. Also, the majority leader of the Senate said the proposed legislation for tax cuts would raise taxes on some middle-class families to help pay for corporate tax cuts. Even with such a great stock market, there remains upside. This chart shows the increase in the S&P 500 a year after each election. 21.1% is great for Trump, but since 1952, Clinton, Kennedy, Obama, and Bush 1 were better, so there is great more upside to Trump's numbers. As always, feel free to call or email me with any questions. We hope all have a safe and profitable week.